According to Société Générale, Central Europe has been at the forefront of EM rates rally over the past few months, with the Czech Republic, Poland and Hungary leading the way in terms of relative moves. For the first of this week's Targets and Focus programme, I am joined by Guillaume Salomon, strategist with SocGen, to discuss the forecast of each of these currencies in turn against the euro. Hello Guillaume. Now could you start by telling us your take on market behaviour at present and what events you would recommend traders keep their eyes out for this week?
In general, I think markets are quite well orientated. I think there's still a lot of money to put to work. If you look at the statement that we got from the Fed last week, it was very dovish, definitely dovish, highlighting that policy rates in the US are going to be extremely low. The latest speculation in terms of the Eurozone is as to whether the ECB will cut or not. And in that context, the overall environment for risks remains positive. So now, in terms of the key factors to watch out for, we've got quite a few central bank meetings this week, especially in emerging markets. We've got Turkey. We're also going to get some rate decision out of Hungary. So that's the markets that we're going to be looking at for.
In terms of Hungary, I understand you see room for more yield compression driven by continued policy easing and the appetite for high-yielding markets. But what impact do you think this might have on the forint in the short, mid and longer term?
Yeah, sure. I think for the moment, fixed income, especially the back end of various local markets, so bonds in the 5 to 10 year area, will continue doing well. Simply because, as I said, the G7 backdrop remains favorable for very low rates. As I said, the Fed and the ECB keeping ample liquidity in the system means that the bond market is very well supported. So for global investors looking for alternatives and looking for yield, they are turning to local emerging markets. And the ones where we've seen the most flows into have been Turkey. One of the reasons, as we mentioned, is the fact that Turkey and the central bank has been gradually lowering rates, and we expect them to do the same this week. The other markets where we see potential for further rate cuts is Hungary, and yet again we're going to be having a rate decision this week, and it should see a 25 basis point cut. Well, Hungary is a difficult case in Central and Eastern Europe. It's how do you say, it's the heavy hand of the government being seen everywhere, including on the central bank. I think the Hungarian forint will underperform some of its peers, and I actually think that over the course of the next 6 months next year, we're going to see the forint back towards 292 to 296 easily.
If we take a look at the Polish zloty, you're forecasting a dip to around 3.90 against the euro. But what do you believe will be the main factors driving it forward?
Okay, we really like the zloty here. We think that the bond market will continue being well supported. We still think that the zloty is one of the darlings in emerging markets. So short term, I think euro zloty is probably going to try to have a little look lower into the end of the year, all the way down to 4.64, 6.50. Medium term, we really like it as well. And I can really see a move all the way down to 4, but that's not immediate. I think it will take quite a bit more time, and that will depend on the global market conditions.
Analysts are expecting the Czech National Bank to maintain key rates for the foreseeable future. Subsequently, they say the CNB will have to substitute the interest rate tool with an alternative in order to spur growth. With this in mind, what is your 1, 3 and 12-month projection for the Czech koruna?
In the Czech Republic, it's a very tough game at the moment. What we are seeing is a central bank that wants to weaken its currency to get growth going. Basically, the Czech National Bank has cut policy rates to as low as it can, and now is looking at alternatives, and one of the alternatives that is found is to weaken the currency. However, we think that the market will have to push them into it. So I think we're going to see the Euro-Czech move lower first, move through 25, and then as we move through 25, I think the noise from the central bank is going to increase, and eventually the market will push the central bank to intervene in the FX market. So the initial move is down to 24, 50, probably 60, and then eventually in the longer term, once the FX intervention takes place, I think Euro-Czech will go all the way up to 26.
Guillaume, thank you very much for your insights today. Well, sadly that's all we have time for at the moment, but if you haven't seen it already, please do click back to Dukascopy TV for the week ahead interview with my colleague Dermot McDermott. Bye for now.